No tax on Social Security benefits. That was one of Donald Trump's campaign promises, and I think by now most people probably realize that we didn't quite get exactly that. We got something else that's not bad, but we didn't get the complete no tax on Social Security benefits. Now, personally, I was a very big fan of no tax on Social Security benefits, and I bet most of the people watching the video are as well, because we paid into the Social Security system through that payroll tax through our entire working lives. Every paycheck that went by, pretty much, we were contributing to that Social Security system. And up until relatively recently, Social Security benefits weren't taxed at all when we got those benefits in retirement. In fact, the first time those Social Security benefits became taxable was in 1984, where up to 50% of your Social Security benefits were subject to that tax. Then in 1993, they increased that from 50% to where it is today at 85% of your Social Security benefits are subject to that tax. So I would love to see this whole Social Security taxation completely eliminated, but again, there was a little bit of a battle in Congress and they had to agree and compromise on this, and what we got instead was something called the new Senior Bonus Deduction here. And this is something that was created as part of that One Big Beautiful Bill Act that was signed on July 4th, 2025. And what it is, it's an eligible $6,000 per person that's over age 65. And if you meet certain criteria, you're going to get an extra $6,000 deduction. And if you're married and you're both over age 65, it could be a $12,000 deduction that you could get. And this is only going to be for a limited time only. It's only going to be for the next 4 years, including 2025. So hopefully Congress will get back in session, and maybe at some point in the near future, maybe they'll extend this beyond 2028, or maybe they'll really try to hash this out and figure out a way to make these Social Security benefits completely tax-free, which I'm sure all of you would absolutely love to do that. So again, it's going to be for those individuals that are 65 years or older, and it's up to $6,000 per eligible person. One very interesting thing is you don't actually have to be collecting Social Security benefits to get this extra deduction. So even if you're still working, you can still get the $6,000 deduction. Or if you just decided to delay Social Security benefits for whatever reason. So that's going to be a nice feature for a lot of people. Now, there is going to be an income threshold that you're going to have to be under in order to get this full amount of this deduction. So it's going to be, for single filers, it's going to be $75,000 or less for what is called your modified adjusted gross income. And just for a refresher, that's pretty much just lumping all of your income in there together. Anything you get money from, including things like tax-free interest, which gets added back into your adjusted gross income. And then for married couples, married filing joint, it's going to be $150,000 of modified adjusted gross income. So if you're under those levels, you're going to get the full $6,000 deduction. And if you're married and you and your spouse are both age 65 or older, you're both going to get that, and you're going to get a total of $12,000. One thing I want to just back up for a second, it's going to be for those people that are 65 years or older in the tax year. So for example, my dad has a birthday that's on New Year's Eve, December 31st. Now he's well over the age of 65, but if he was turning 65 this year on December 31st, he would still qualify because he would be 65 years old during the tax year there. And then for every dollar that you're going to be over those thresholds, they're going to start to take away 6% of the amount that you're over the threshold. So to kind of put that into perspective here, if you're a single tax filer and you have $100,000 of modified adjusted gross income, you're going to be $25,000 over that limit. 6% of that is $1,500. So instead of getting the full $6,000, you're going to get $4,500 for your deduction. Still not bad. If you're married filing joint and you have $200,000 of modified adjusted gross income, you're going to be $50,000 over that threshold, and that's going to be a $3,000 reduction to that extra senior bonus deduction. If you're both over the age of 65, that $3,000 is going to come off of the $12,000 total combined senior bonus deduction, so you're still going to get $9,000. Pretty good. If one of you is over the age of 65, but your spouse maybe is not 65 yet and they don't qualify for it because of their age, your $6,000 deduction is going to be reduced by that full $3,000. So you're only going to get $3,000 if you're in that situation. And the top phase out for this is going to be if you're over $175,000 single modified adjusted gross income or $250,000 modified adjusted gross income for married filing joint, then you're not going to get any of the senior bonus deduction there. So what are the planning opportunities? So one of the things we talk to our clients about a lot is how to withdraw money from their retirement accounts and what that's doing to their taxes as they're pulling money out of, say, those traditional retirement accounts. Or maybe we're trying to fill up a tax bracket. Maybe there's enough money coming in and we're going to take some money out anyway, and we're going to do a Roth conversion so we can take that out at a lower tax rate and move that money over to a Roth so we can get tax-free growth. So if we take an example here, so the top end of the tax bracket for married filing joint for the 12% tax bracket is $96,950 for 2025. Standard deduction is $31,500. That's a little bit of an increase. That's a $1,500 increase over what it was supposed to be for 2025 because the One Big Beautiful Bill Act did increase that a little bit there. So it went from $30,000 to $31,500. You also may know or be aware that you're going to get an extra deduction just for being over 65. That's something that's been in place, I think, for multiple decades here. It's $2,000 if you're single, and it's going to be $1,600 per individual over age 65 if you're doing a married filing joint tax return. So if we assumed here that you had both individuals in a married filing joint tax return that were over age 65, you're going to get an extra $3,200 for that. And then now this new senior bonus deduction is going to be another $12,000. And that's going to be for a total amount of income of $143,650. So we're just under that modified adjusted gross income. So something to think about as you're planning out your taxes at the year end, something we do with our clients on a pretty regular basis, and we're running these numbers through our financial planning software, is looking at what are all the sources of income that you have coming in for the year. Where do you think that modified adjusted gross income is? And now with an extra $12,000 deduction, does that give you a potential opportunity to do a Roth conversion and move over $12,000 or some other amount over into your Roth account so you can get some of that tax-free growth? So those are just some of the things to think about, but this is a really good opportunity, and I'm amazed because I've had dozens of meetings over the last several months, and as we're talking about their taxes, and people are just not aware that this was part of the One Big Beautiful Bill. Most people are just like, hey, we didn't get the no tax on Social Security, but we got something else instead. It's not quite as good as what it would have been if we would have had the no tax on Social Security, but an extra $12,000 to deduct off of your income is not a bad thing, and hopefully Congress can work in the future towards getting that Social Security benefit completely tax-free. So I'm Bill Lethman, moneyevolution.com. I'll see you back in one of our future videos. Thanks.